Hello, very good morning to all. Welcome to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here again. Today will be the Tuesday, the 12th of August, 2025. So before we kickstart our gist of the Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. Excuse me. Right. So as usual, before we kickstart the gist of our daily dose, which is the intraday technical outlook on the four major US dollar pair, the six major global stock indices, and as well as the two key commodities market, which is i.e. gold XAU/USD and the West Texas crude oil. Let's have a quick recap what has taken shape yesterday first in terms of the news flow, relevant economic data release if there's any, and as well as today's Asia session release of any economic data that is pretty much important as well on its impact on those broad-based cross-asset classes intraday price section movement. All right, so let's start with the overnight market first. So overnight market, which is the US stock market, there's this one particular news flow I'd like to share with you guys. Will be this rather interesting regulation regarding US semiconductor chips and its related, we call it processor parts or processing parts, sale to China. All right, so we know that US and China has been embroiling in this ongoing 5-year plus of US China high tech war, where both superpowers try to actually restrict one of another from getting the best technology know-how, both in terms of software and hardware. So recently, NVIDIA and in a way AMD has been being put into the forefront regarding about their chip sales towards China, and both of these two key US semiconductors company, especially NVIDIA. We know that NVIDIA right now has a significant influence in the benchmark S&P 500 and as well as the Nasdaq 100 because NVIDIA is the biggest market cap stocks in these two major US stock indices. So whatever news flow that is centered on NVIDIA could have a significant impact on the S&P 500 and the Nasdaq 100 from an intraday perspective. So there was this news flow out yesterday stating that both NVIDIA and AMD, Advanced Micro Devices, has agreed to pay 50% of their revenues from Chinese AI chip sales to the US government. So this is rather unprecedented. So right now, NVIDIA, in order for NVIDIA and AMD to do business with China on their AI segment, in order to ship this lower tier AI related chips to China, they got to pay 15% of the total revenue generated from the Chinese market back to the US government. So this is rather unprecedented. So they've agreed to it. So if this being put into what I call it paper in a way, that could actually see different kind of revenue sharing between US government and US corporation if they want to actually ship up certain we call it products towards country that US deem as adversary, and in order to do so the US government will get a pie of the revenue share. All right, and what's interesting, that actually causes the negative feedback loop into the US stock market yesterday. So from a perspective, you look at the intraday movement of the US stock market, they actually tried to rose at the first half of the session where the S&P hit an intraday high of 6,407. That is still below the fresh all-time high level at around 6,430 before trading downwards in the second half of the US session yesterday and closed in the red. Not that bad, not a negative 1% decline, but rather a negative 0.25% decline. And the the Nasdaq, the higher beta Nasdaq 100 rallied intraday. Very interestingly, on the intraday, they managed to hit a intraday fresh all-time high at 23,697 before inching downwards and sold off in the second half of the US session. So the higher beta Nasdaq 100 is down by negative 0.36%. The Dow Jones Industrial Average by a slightly bigger magnitude, down by negative 0.45%, whilst the Russell 2000 outperformed, almost traded flat, down negative 0.09%. And most interesting that towards as the US session kickstart, there was also a positive news flow out from the administration itself, from Trump. All right, so Trump mentioned in a press, we call it a reporter, or we call it report, or a press report, saying that he will consider a deal. Okay, let me expand for you guys to see. He will consider a deal to allow NVIDIA to sell a scale-back version of its Blackwell chip to China. That means, i.e., we know that the Blackwell chip is at this moment in time, is the higher end NVIDIA chip globally. So Trump is open up to an idea to sell a scale-back version. So that is perhaps 30% to 50% off this enhanced higher tier Blackwell chip over here. So that actually saw we call it the US stock market to actually rallied in the last a bit of bounce in the last half an hour of the US session that was being traded yesterday. So overall, what we could see is that yesterday's sell-off, intraday sell-off, I would say, in the US stock market is more pertaining to a consolidation rather than the start of a medium-term corrective decline phase on the major US stock indices. So later I'll share with you what are the key levels to look out for today on the three benchmark US stock indices that we cover on a daily basis. That means on the S&P 500, the Nasdaq 100, and as well as the US Wall Street 30. So that's the representation or the representative of the Dow Jones Industrial Average in our platform. We call it the US Wall Street 30. So let I'll share with you the latest technical outlook on these three benchmark US stock indices on the second segment of today's Daily Dose. Then next up, I want to share with you guys over here is the FX market. So for the FX market, we see a bit of dollar strength coming back on the intraday basis against the yen and against the dollar Swiss, whereas the dollar continues to trade sideways against the euro, against the sterling, and against the Aussie dollar. So if you look at the 1 day, this is a 5-day rolling performance. So if you look at the 1 day rolling performance, that means it's a much more shorter time scale over here. The dollar is in fact very weak right now against the Aussie dollar. So based on the 1 day rolling performance, the dollar has started to sell off since the start of today's Asia session. So it's down currently by negative 0.15% against the Aussie. Why? Because the RBA central bank will actually announce its latest monetary policy decision at 12:30 p.m. Singapore time today, and market is more likely has been fully priced in a 25 basis point cut, and market now is looking ahead for a much more cautious RBA going forward. All right, so that actually explains to us why the dollar is selling off against the Aussie right now, which is down by negative 0.15%. So later I'll cover the Aussie dollar latest technical outlook over here. Okay, so one thing to actually share with you guys very interestingly is the Japan 225 over here. So if you look at the Nikkei 225, this is the cash market. All right, so the Nikkei 225 today finally staged that expected bullish breakout over here from its 1 year plus of range configuration since the last all-time high that was printed on 11th of July 2024. So those who followed my daily dose on a very frequent basis, I've been emphasizing that there has been positive element on the Japan 225, that's our CFD index, representing the Nikkei 225 in the last month or so. So things has been going on smoothly within our expectation. So what are the key levels to look out for the Nikkei 225 for today, which i.e. the Japan 225 CFD index? I will cover it in my second segment of today's daily dose. So what we could see over here is that despite this ongoing, what you call it, trade tariff tension that is still prevalent in the global market space, market now has been looking forward to a potential increase in global liquidity, likely to be led by the US Federal Reserve next month, and causing a positive feedback loop into global equities right now as we are speaking. So the Nikkei 225 yesterday, the cash market is closed for a public holiday, so there was actually a gap up in today's we call it cash market, when the Tokyo stock market when the Japanese stock market reopened for business today after yesterday's closure. So they are up by positive 2.5% over here. The Hang Seng index is rather flat right now, almost unchanged, 0.00% in fact over here. But whereas the CSI 300, which is the A shares, is continues to pass in a positive landmark, up by 0.2% due to this optimism coming out from the ongoing US-China, we call it trade negotiation. So yesterday, Trump decided to actually give the final call to extend this ongoing US-China trade truce for another 90 days. So bear in mind that today is actually the due date of that trade truce between US and China that was early agreed upon in Geneva a couple of 2 months ago. So the 30 days has been due today. So now Trump decided to actually extend for another 90 days. So the next due date will be on the 10th of November. So all things now go back to normal. There's still tariffs ongoing. So China products heading into US will be taxed at 30%. And US products heading into the China will have a tariff rate of 10% as ongoing as a trade negotiation between these two countries take hold for another 90 days over here. So basically, it's like kicking the can down the road, but that could actually potentially keep alive the bullish momentum that is being seen globally on global stock market. All right, from here. And another news flow I'll share with you guys is more pertaining to the gold market over here. So where's the gold market? Yes. So previously on Friday, there was a report coming out from the US Customs saying that gold bullion bars will be facing a tariff heading into the US market. So that causes the gold futures market traded on the US futures exchange to spike up to fresh all-time high on Friday. And as this news flow gets trended downwards, pending confirmation from the US White House and Trump himself saying that gold imports heading to US will not be tariffed at all at this point in time. So that offer a relief and causes a mini sell-off in the spot gold XAU slash USD yesterday. So spot gold XAU slash USD was down by 1.2% yesterday, if I share with you guys over here. So it's down by 1.6%, all right, over here. But what's interesting over here is that the sell-off managed to stall at the 20-day and the 50-day moving average, offering some form of a near-term support for gold. And right now, deep buyers, technical oriented speculators seems to be coming into the market, supporting gold prices, which is up by 0.3% as we are speaking. So later I'll share with you guys what are the key levels to watch out for today's intraday technical outlook on spot gold XAU slash USD when I cover the second segment of the daily dose over here. So that's potentially wrap up the first segment of the daily dose. So let us now proceed to the second segment of the daily dose, which is the intraday technical outlook on all those broad-based cross-asset classes that we cover from a daily basis, ranging from the FX market, the global stock indices, and the two key commodities market. So let us kickstart with the FX market first. All right, so without further ado, let me expand my screen. All right, The screen is good. So let us start with the FX market with the euro dollar. All right. So the euro dollar, yesterday we do mention that we still keep a bullish bias as long as the pivotal support at 115.90 is not surpassed. We don't want to tighten the pivotal support to be so tight because the euro dollar hasn't broken above our first resistance at 116.80, 117.05 after hitting it on last Thursday. Right. So far the euro dollar yesterday do a sell off during the start of the US session over here. Okay, there was a sell off. So this sell off managed to help at 115.90. So actually it start to show off during the middle part of the European session, heading into the start of the US session at then after that at 11 p.m. Singapore time, it managed to actually stage a bounce and traded rather almost in a very tight sideways range after hitting the 115.90 pivotal support level. So price action seems to be consolidating right now, also due to the fact that we have a key tier 1 US data that got to be released later today. Later I'll share with you what is this data. It's actually the US CPI data, okay, towards the third segment. So, but however, from a technical perspective, support still holds on the euro dollar at 115.90 over here. So given that the support is still remains intact, we will not want to actually rock the boat and turn to a bearish stance despite yesterday's sell-off on the euro dollar. So still looking for a kind of a recovery on the euro dollar using 115.90 as my short-term pivotal support for today. And I will have a intraday upside trigger level, okay, which is yesterday's this Friday minor swing low taken down yesterday during the middle part of the European session. Right, so this will be my kind of a upside trigger level at 116.35. A breakout above 116.35 may revisit the first resistance zone at 116.80/117.05 for today. Right. However, if you start to see a price breakdown below 115.90, then potentially this corrective decline scenario on a very short-term basis will start to extend further towards the downside, exposing the next near-term support level at 115.20, which is the minor swing low area of 1st of August and 5th of August, and as well as a Fibo retracement of this ongoing recovery phase that is still intact since the low of 1st of August all the way down to last Thursday swing high. That represent a close to the golden ratio of 61.8% as well. Right, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar continues to bounce right above our pivotal support zone that we highlighted yesterday at 134 figure, 133.80, which is also the 20-day moving average after hitting it during the start of during the first half of the US session at 11 a.m. Singapore time. 11 p.m. Singapore time, pardon me, yesterday 11 p.m. Singapore time before its station bounce. So overall technical elements still remains rather positive over here after yesterday's bounce off the 20-day moving average. So what we could see that this is indeed a pivotal support zone to maintain our bullish bias for the sterling dollar, still keeping it the same at 133 figure, 133.80. So first resistance level to watch out for today will be the minor swing high that is being formed during the start of the European session yesterday at 134.70. Above 134.70 exposes the next resistance at 135.10, which is also confluence with the 50-day moving average acting as a next intermediate resistance level. Above 135.10, seek out 135.55, which is the 2-time Fibo extension of this ongoing recovery that is in place since 1st of August low and the minor swing high area of 24th of July. However, only a price breakdown below 133.80, the lower limit of that short-term pivotal zone, that would invalidate today's intraday bullish bias to see the extension of that minor corrective decline sequence, exposing the next near-term support level at 133.15. So overall, still maintain that bullish bias on the sterling dollar using 134 figure, 133.80 as my short-term pivotal support zone for today. Next up will be the Aussie dollar over here. So the Aussie dollar continues to trade higher as we are speaking, and also the RSI now managed to actually inch up higher above the 50 level mark as well, indicating some form of bullish momentum ahead of RBA decision for today. So I do not want to tighten my short-term pivotal support level to be so tight at around the 65 figure level over here, which was yesterday's US session low, as price action hit the lower boundary of this ongoing minor ascending channel support that is in place since 1st of August, and now is trading back above the 20 and the 50-day moving average after a reintegration back below it yesterday during the US session. So what we could see over here is still holding ground, or I would say that it's still doing a bullish consolidation within this ongoing minor ascending channel that is still evolving it since the low of 1st of August. So with such positive element on a intraday basis, I'll be still having that bullish bias on the Aussie dollar. Still no change, using 64.80 as my short-term pivotal support level. First resistance level to watch will be 65.40, 65.55, where the consolidation took place. This minor consolidation take place since the rally of it on last Thursday before it starts to trade sideways. Above 65.55 will potentially unleash a more pronounced intraday bullish momentum to hit the upper limit of this minor ascending channel that is also confluence with the minor swing high area of 28th of July at 65.80. And if I were to do the Fibo extension of this ongoing recovery from 1st of August over here, okay, push it to the low. So that also constitute a confluence with the 0.764, 0.764 Fibo extension at 65.80 as well. However, if price action starts to do a sudden bearish reversal and a bearish breakdown below 64.80, that would invalidate today's intraday bullish bias to see a further deeper corrective, we call it minor corrective setback towards the next near-term support level at 64.40, 64.50. A breakdown below 64.50 will expose the critical swing low of 1st of August at 64.20 next. So that's for the Aussie dollar. Okay, next up will be the dollar yen over here. So the dollar yen is the one outlier right now, as it did a squeeze up above the 20-day moving average. So it seems to us right now is approaching to retest this 14875 and what potentially 14950 again, which is the 200-day moving average. It continues to trade within this complex sideways range. So if you look at the daily chart of the Aussie dollar, it's still doing this complex ascending sideways range configuration since the low of 2nd of April. All right, it's not a bullish impulsive up move sequence, but rather a complex sideways range ascending range configuration. All right, after that failure bullish breakout above the 200-day moving average on 1st of August. All right, so it seems to be there's going to be another retest at the 200-day moving average again. RSI hourly is not showing any signs of a bearish divergence over here, because we start to see a series of higher high. Okay, there's no bearish divergence at all. Okay, so what we're going to do now that I got to respect the price action for that residual push up. Okay, so for today, I'll be flipping to a intraday bullish bias on the dollar yen for this potential residual push up towards the 200-day moving average, using the 20-day moving average over here as my pivotal support level for today. Okay, which is at 147.90. Okay, let me change this. Okay, give me a couple of seconds. Hopefully it starts to open up the dialog box. Sometimes it get hang in a while. Okay, come on. Yes, good. 147.90. Okay, using 14790 as my short-term pivotal support on the dollar yen. So I will flip to a intraday bullish bias for this residual push-up within this medium-term sideways complex ascending range configuration that the dollar yen is still evolving since the low of 22nd of April, which I shared to you earlier on the daily chart. Intraday resistance to watch out for in this residual push-up scenario, 14875. Above it exposes the critical 200-day moving average at 14950. So once the dollar yen float into this area, 14875, 14950, I'll be on the lookout for bearish reversal candlestick pattern on the lower time frame to flip my bias back into a bearish we call it a view, because it's still evolving in a ascending range configuration rather than the start of a clear medium-term bullish impulsive up move trend. However, if price action suddenly reverse downwards and break below 14790, then the honors will flip back to a bearish bias for it to float down towards the lower limit of that sideways range again, exposing the critical near-term support zone at 14680 / 14660 that has been in place since 5th of August 2025. So that's for the dollar yen. All right, and also sum up the intraday technical outlook on the 4 US dollar major pair. So let us focus our attention now towards the major stock indices, starting with the Hong Kong 33, which is representing the Hang Seng Index. So the Hong Kong 33 continues to actually hold right exactly at the pivotal support, a tightened one or adjusted one that we highlighted yesterday at 24,790. So let's have a bit of access. Yesterday there was a challenge of it, okay, with a low of during the US session at 2 a.m. Singapore time today at 24,725. All right, so that's this bit of access, 725. Okay, so still maintaining that bullish bias with this access at 725, 24,790 / 24,725 over here. So the RSI also showing some signs of positive momentum coming back into the picture if you are to do this bullish breakout over here. So what you could see is that the RSI now managed to stage a bullish breakout from its previous lower high that I could actually draw as a parallel descending trend line. So this actually indicate a positive element on the hourly RSI, indicating some form of bullish momentum coming back into the market potentially for the Hong Kong 33. And that occurrence occurred right exactly at the pivotal support area with the access at 725. So 24,790, 24,725 is indeed a pivotal support area to maintain my bullish bias for the Hong Kong 33, representing the Hang Seng Index. First resistance level to watch will be last Thursday swing high, where this minor congestion took shape so far at 25,090. Above 25,090, you may see a further push up towards 25,220. Only a bearish breakdown below 24,725 will negate today's bullish tone to seek out another form of consolidation or the extension of this ongoing corrective decline scenario in the minor time scale to expose the next support level at 24,600. Below 24,600, seek out 24,380, which confluence with the 50-day moving average, and as well as the lower limit of this ongoing medium-term ascending channel that is still intact since the low of 2nd of June. So that's for the Hong Kong 33, still maintaining our bullish bias stance using 24,790 / access at 24,725 as my short-term pivotal support zone. Next up will be the Japan 225, representing the Nikkei 225. So very clearly, it continues its bullish momentum and broke above the previous all-time high at 42,513 as depicted by this Japan 225 CFD index in our platform. So this will be a pullback support level, right? This will be a pullback support level to watch out for. So I do not want to squeeze it to be so tight as my pivotal support. So this will be my first support level. Pivotal support, I will adjust it slightly higher to these two minor swing low over here, two former minor swing high. Firstly, 24th of July previously on Friday, where it do a minor pullback before shaping this bullish impulsive up move sequence. So this is indeed a very important psychological level, a clear pullback line for the bulls to actually reset itself if there will be a potential consolidation taking shape. So first support level to watch will be 42,513, the former all-time high area. So given that the hourly RSI is really coming to the overbought level, so there could be some form of a minor pullback towards the 42,513 level with clear short-term pivotal support at 41,975. We'll still maintain that bullish buyers outlook on the Japan 225. To seek out the next resistance after 43,100, 43,230, you'll be at 43,560, 44,050, 44,110, which is being defined by a Fibo extension cluster levels. However, only a bearish breakdown below 41,975 that would invalidate today's intraday bullish buyer stand on the Japan 225 to see a deeper corrective decline scenario unfolding, exposing the next near-term support level at 41,610, followed by 41,285 next. So that's for the Japan 225, still maintaining our bullish bias with a tightened adjusted short-term pivotal support at 41,975. Next up will be the Germany 30, representing the German DAX. So the Germany 30 continues to actually stage a recovery over here. So right now is attempting to actually recapture the 20-day moving average after yesterday's price action consolidation around it over here. So even the hourly RSI also managed to stage a bounce off from a parallel ascending trendline support level over here, holding above and also inching back up towards the 50 level mark as we are speaking right now, indicating some form of bullish momentum that is creeping back into the Germany 30 CFD index. So with no change, still maintaining our bullish bias on the Germany 30 using 23,990 as my short-term pivotal support level, unchanged from yesterday. We also confluence with the 50-day moving average as well. So first resistance level to watch for today will be last Thursday high, where the price action staged a minor consolidation yesterday, and on Friday as well, 24,360 over here, 24,360. That will be my first resistance level to watch. Above 24,360 exposes 24,140 next, which is the minor swing high of 24th of July and 28th of July that lead to that that so-called 3 plus of corrective decline scenario, hitting the climatic sell-off low of 1st of August before the recovery takes shape. However, if price action break down below 23,990, today's bullish bias will be invalidated to kickstart another round of choppy minor corrective decline scenario, revisiting 23,790 and 23,600 again. All right, so that's for the Germany 30, still maintaining our bullish bias with the short-term pivotal support level at 23,990. First resistance to watch today will be lower at 24,360 before 24,360 before this 24,560. So there's a depot error over here. 24,560. Right, so there's a depot error 23. My apologies, I should be 24,560 over here. All right, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30, which is the Dow Jones Industrial Average. So the US Wall Street 30 continue to consolidate in a sideways range below the first resistance, but holding above the 50-day moving average, which is also our pivotal support that we have from yesterday at 43,750. So no change, still maintaining that bullish bias on the US Wall Street 30 as it slowly staged this recovery scenario after that sell-off that has taken shape from 28th of July high all the way down to the 1st of August low. And also the hourly RSI also managed to be held above this key parallel ascending trendline support that is in place since the low of 1st of August. So no change in terms of the levels, maintaining that bullish bias using 43,750 as my short-term pivotal support level. First resistance it got to surpass in order for the bulls to gain more traction will be the 20-day moving average, I think, as the key intermediate resistance at 44,390. Above 44,390, we'll see a much more pronounced recovery heading towards the next intermediate resistance level at 44,780 on a near-term basis. Only a bearish breakdown below 43,750 will negate today's bullish bias to see another round of a corrective decline sequence unfolding in the near term, retesting the critical 1st of August swing low area at 43,475 over here. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 yesterday did a minor pullback, and thereafter it's just attempting to trade slightly higher as we are speaking right now, but still holding above the 20-day moving average. So this is still a clear critical pivotal support zone to watch. 6,347, 6,330. Maintain using this critical short-term pivotal support zone to maintain my intraday bullish bias on the S&P 500. Next resistance on the near-term basis will be the current all-time high area at 6,430, 6,450. Above it, potentially 6,470, 6,490. So if you were to look at the current configuration right now, since the low of 1st of August, it started to trace out a minor ascending channel, all right, over here, indicating the ongoing bullish momentum that is still prevalent in the S&P 500 over here. So very interestingly, if you look at the latest price action configuration of this ongoing minor ascending channel that is trying to evolve in since the critical swing low area of 1st of August, the top of this minor ascending channel also confluence with my second resistance right now at 6,470, 6,490, giving it a very important upside trajectory in terms of confluencing of elements. So no change, still maintaining that bullish bias on the S&P 500. But however, if there's a sudden U-turn below 6,330, today bullish bias will be invalidated to see another round of a minor corrective decline sequence unfolding, exposing the next support level at 6,305, 6,290, which is my medium-term ascending channel support that I drew from the low of May 2025. So that's for the S&P 500. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 also continues to evolve over here as well. So if you start to see this sequence of higher high and higher low, the Nasdaq 100 hit the all-time high area at 23,710 formally, that was printed on the end of July, before staging that minor pullback, and right now is attempting to actually inch up higher again after a retest of yesterday's former minor swing high, or Friday former minor swing high, now turns into a pullback support at 23,490. So still no change, given that it hasn't broken out above 23,710. I do not want to tighten my pivotal support to be so tight for today at 23,490. I will still be using 23,295 as my short-term pivotal support, which is also constitute with the confluencing with the rising 20-day moving average as well. So above 23,790, potentially seek out the next intermediate resistance, which has been defined by a Fibo extension cluster level at 24,020, and also right now the ongoing parallel ascending channel from the low of 1st of August over here. Okay, it seems to be it's constituted very closely to that level as well at 24,020. So however, if you start to see a price action breakdown below 23,295, today's intraday bullish bias will be invalidated to see a deeper corrective decline on the intraday basis to expose the next near-term support level at 23,190, which is also confluence with very closely to the lower limit of this ongoing medium-term ascending channel support that is still in play since the low of 23rd of May. All right, so i.e. Watching these key levels very closely on the Nasdaq 100, short-term pivotal support to maintain that bullish bias, 23,295, unchanged for now, unless we have a bullish breakout above 23,710, then I will tighten my short-term pivotal support to 23,295 on the Nasdaq 100. All right, so next up will be the key commodities market, starting with gold XAU/USD over here. All right, so for gold XAU/USD, that minor sell-off due to that confusion over that gold bullion tariff has allowed it to float back down towards the 20-day and the 50-day moving average, and also right above our pivotal support that we highlighted since last Friday and maintaining it on last Thursday and maintaining it on yesterday as well at 3,334. And what's interesting over here is that the hourly RSI has started to shape a bullish divergence. While price action starts to go sideways over here, the RSI starts to slope upwards. So giving that level here, 3,334, a very important level. So using 3,334, and if you were to do that trend line, support level as well. Okay, tested one time, two time, three time. All right, so it's now at this minor ascending trend line support from the low of 31st of July. So using 33,334 as my short-term pivotal support level, having a bullish bias for today for gold XAU/USD for at least a potential minor recovery. First resistance level to watch out for today will be this level here. Okay, it's a zone. Okay, 3,372, 3,372, 3,383. Okay, so this former congestion zone here where it broke down and shaped that steep intraday sell-off at the start of the European session yesterday at 2 p.m. Right, so this will be 3,372 slash 383. Right, so this will be the first resistance zone to watch. A push up above 3,383 potentially retest that range resistance that has been in place since last Friday at 3,402. However, if price action starts to break down below 3,334, then potentially gold XAU/USD will float down towards the medium term range support area at 3,310, followed by 3,283 next. So that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil continue on the hourly time frame. So the West Texas crude oil continues to consolidate over here below our pivotal resistance level, a tighten one, which we have on yesterday at 65.60. So still using this short-term pivotal resistance level at 65.60 to maintain our bearish bias. It continues to trade below the 20, the 50, and the 200-day moving average. Next short-term support level to watch will be at 62.50, followed by 61.30. So 62.50 will be the minor swing low area of 2nd of June and 5th of June, and 61.30 which will be the former gap up that was being formed on over here, this gap up. So okay, this gap up on 30th of May turns into a pullback resistance at 61.30. All right, so still maintaining my bearish bias for West Texas crude oil, holding below 65.60 short-term pivotal resistance level, with the near-term support coming in at 62.50, below it seek out 61.30. Only a bullish breakout above 65.60 will invalidate today's intraday bearish bias to see a squeeze up to revisit the next resistance level at 67.40, which is the 50% Fibo retracement of this ongoing impulsive downward sequence that is in place since 31st of July high all the way down to last Friday minor swing low. Above 67.40, retest the key 200-day moving average at 69.15/68.50, which is the golden ratio, 61.8% Fibo retracement of this ongoing impulsive down move from the high of 31st of July, and the 76.4 Fibo retracement as well, converging very closely to 69.15/68.50. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for? So key data to look out for in the Asia session at 12:30 p.m. will be the RBA interest rate decision. So market participants has almost fully priced in a 25 basis point cut. So that will be a third cut for this year from RBA, which is the Australia Central Bank, bringing the cash short-term policy rate to 3.6% from 3.85%. Then thereafter, you got to pay very close attention to the press conference at 1:30 p.m. Singapore time. And also this release of this RBA interest rate decision, they also give a latest forecast on GDP growth for this year, next year, and the year after, and as well as inflation growth as well. So very likely RBA will maintain a cautious stance after today's interest rate cut, guiding market participants that it will not be a series of interest rate cut going forward as they maintain their data dependent stance again. Then at 2 p.m. Singapore time, we will have the UK labor market data, unemployment rate, and as well as the unemployment change. They will be out at 2 p.m. Singapore time, so that could potentially influence the sterling dollar, the sterling crosses, and as well as the UK 100 CFD index. And at 5 p.m., we have the key tier 1 Eurozone economic data, which is the ZEW Economic Sentiment Index for the month of August. So that will be out at 5 p.m. Singapore time. So that could influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index over here. And at 8:30 p.m. will be the all-important core inflation rate, because that could also influence the thinking of the US Federal Reserve officials and also market participants' expectation of the upcoming Fed interest rate cut. That is very high chance based on the CME Fed Watch 2 right now. They're looking at close to 70%, if I'm not wrong. Okay, let's have a quick look again at the CME Fed Watch 2. Where this data is taken into account of the Fed Funds futures traders expectation, on the next FOMC meeting. So based on this CME Fed Watch 2, Fed Funds futures trader is expecting a high chance of 84% that the Fed may cut its first interest rate cut for 2025 on the upcoming 17th of September 2025 FOMC meeting. So let's see whether the CME, the latest core inflation rate data will tilt the pendulum, because market is expecting a slight dip for the core inflation rate to dip down to 2.9% year on year for the month of July from 3% print. Sorry, give me a minute. Okay, market is expecting a slight uptick, not dip. So based on the expectation right now, my apologies. So previous print is 2.9%. So market is expecting a slight uptick of 3%. All right, just a slight tick up to 3% year on year, but that so far hasn't derailed the expectation of the up and coming interest rate cut as portrayed by the CME Fed Watch 2 on the next FOMC meeting in September. So something to look out for. So if the core inflation rate came down below expectation at 2.9% or even lower at 2.7%, that could potentially influence the US dollar. So the US dollar could start to see further weakness if core inflation came in below expectation. So that is at 8:30 p.m. Singapore time. Then next up, we will have a Federal Reserve official speaking. So this is quite important given Fed backing will speak after the release of the core inflation data, and Fed Schuming as well, 10 p.m. and 10:30 p.m. Singapore time. All right, so that potentially sum up the daily dose of market insight. So one data to look out for early tomorrow Asia session before the start of our daily dose at 11 a.m. will be Japanese PPI data that will be out at 7:50 a.m. So that could potentially influence the dollar yen and the yen crosses. All right. So that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.